Good afternoon. This is the international arbitrage on January the 10th, 2024. And as I said in a couple of the videos today, the discussions have roared to a start about international fundraising. And as the global financial system becomes more transparent, meaning there's more information exchange, the US is basically kicking off the Corporate Transparency Act this year. And of course, the Corporate Transparency Act, along with the John Doe case pathway, some people are forecasting that US claims of ironclad confidentiality are somewhat over. I don't want to predict the specifics of that, just at the fact that there will be a lot more information exchanged than there was last year and the year before. So there's going to be a lot more information exchanged, which will then, of course, some people proactive will, of course, run out ahead of it. Most won't. And the changes will occur organically over the next probably 3 to 5 years. These things, they always look like it's going to be a logical thing and there will be logical changes, but it never works that way. The changes occur gradually over time. But international fundraising for owner managers of international SMEs doing international business, non-US, this is our focus, and we have a lot of these people in our community, and so these videos are mainly for you guys. And so many of you want to raise money in the US, and raising money in the US comes with its challenges, because in the US you have to use a regulated platform. You can't use introducers, finders, success fees. You can't pay people commissions for raising money. You have to go via a broker-dealer, or you have to do something like set up a crowdfunding platform. Use a crowdfunding platform. And in using a crowdfunding platform, you can raise up to $5 million from US and international investors. And if you want to raise more than that, then you would have to think about having a regulated platform in the US. And we said in a previous video that owner managers who don't want to set up their own fund management companies can basically hire existing fund managers, pay them a fixed fee. Lowest I've seen is normally $25,000 a year, and that's where it starts. And then from there, you can have your own international alternative investment fund manager and an alternative investment fund. But then you need to look in the US, which is a little bit more difficult, because many US fund managers, as you can imagine, have a massive US market to focus on. Very few of them are actually focused on international, and certainly international SMEs. Many of them and their compliance people and their banks will see international SMEs as high risk. And because you're not raising that much money, less than 100 million, the numbers won't carry the day. And so you're back into that kind of decision matrix where people are saying, well, is it worth the risk? Because the compliance risk is going to be high with our banks, with our trustees, with our regulators, whoever. Why should we do this business? And so you have to navigate that. But there are a few US fund managers who can be hired to basically be the fund managers for a US feeder fund, which will feed into your international fund structure, and then you can take it away from there. From an international tax point of view, international business owners, you don't need to become subject to US taxation unless it's absolutely necessary if you're going the route of having a feeder fund in the US. And so that's a very tight line, because of course costs become relevant and you have to look into these things carefully. So we're going to say more about these options later on. Cheers.